Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. And tonight we're going to go over all of the trades that we made on October 7th, and doing this again from inside McDonald's. Hopefully I should have internet tomorrow, so the sound quality and everything should be back up to normal as far as what you guys are used to, and what I'm used to really. What I want to talk about tonight is obviously some of the earnings trades that we made. So we made three new earnings trades. But before I do that, I wanted to again alert everyone who's on the membership right now or on the 7-day free trial that we do talk about things like this on our strategy calls. And in fact, this week on the weekly strategy call that we have on Sunday nights, we covered some of the trades already in advance, some of the trades that we made today. So, like the trade in MON that we had already made today, that was one of the trades that we talked about in our strategy call, kind of looking forward, and had already kind of put that on our radar as a possible earnings trade. So, again, if you want some of that type of in-depth analysis and kind of review overall, talking about earnings strategy and portfolio management and how many trades you should make and how many earnings trades during the week, how much money should you invest in each one, where to place the strikes, that's all stuff that we covered before. And so you just got to sign up for our premium membership, obviously, and then you get every single week you can jump on those calls, plus you get all the recordings of everything that we've done before in the past. So I know I've had a lot of comments and questions about that, and that's a good way to again get yourself prepared for the week. What's coming up? What are we looking at? What are we not looking at? Adjustments that we're making to the portfolio, etc. All right, so here are the trades that we made for today, obviously. And like I said, the three opening trades that we made were all earnings trades. So I want to cover those first. And we'll start with MON. That's one of the bigger ones, definitely one of the higher priced, more liquid ones that's out there, announcing earnings tomorrow before the open. And so with MON, what we did is we sold a strangle like we do with a lot of earnings trades because we're just trying to take advantage of pure drop and implied volatility. So we're not trying to take advantage of a directional move in the stock. We're just trying to take advantage of that one-time drop in implied volatility that we get after the earnings announcement comes through. So let's go over the actual logistics of the trade that we made, and then we'll take a look at the actual profit and loss statement and the analyze tab and all of that stuff so you guys have a good understanding of where this earnings trade is. So with MON, what we did is again sold that strangle. We did the October weeklies, which only have about 3 days to go. So they're the most front contract that is possible. And you always want to do that with earnings. So you don't want to go out to October monthlies, which even though they have about 10 to 11 days left, you want to go very close in. So you want to really kind of force the market to make a big move in either direction outside of the normal range. Again, don't want to go to October, definitely don't want to go to November. That's a strategy if MON or any of these ones that we made a trade on moves outside of this range in our strangle, then we would roll the contract immediately to those longer terms just to give ourselves more time and more credit. But for right now, you always want to start close. So with all of these trades, we did the October 2, which are the second weekly options for October. And again, we noted in the trade alert that they are weekly options. For MON, we sold the 113 call and the 104 put. So very wide. Sold the 113 call, the 104 put, about $9 wide. And we took in a credit of about 87 cents on this trade, which again moves our break even out that much further on either end of MON. So let's take a look here real quick at the chart. You can see it had a really rough down day. That's why you kind of wait towards the last 1 or 2 days before the actual earnings event to make these trades. Had we made a strangle trade 4 or 5 days ago, we could be losing money just purely on the directional move of the stock. So it's usually best to wait until that last day or the day before they may announce earnings, just so that you can get very neutral around the stock, get an even distance on either side of the stock, just trying to take advantage of that drop in implied volatility. But you can see that right now IV rank is up around 74, 73 for MON, very high for this stock. So who knows what's going to happen with earnings? It is tends to be a pretty good mover in either direction. So when we go inside the trade tab and the analyze tab, you can see where our position is on either end. You'll notice that we pretty much put our position about 15% on either end, although the market moved today just a little bit down before the end of the closing bell. Our bottom side is right now sitting at about 21% chance of loss, so the probability that MON opens and closes below 104 is about 21, And on the top side, because the market went down just a little bit between the time we entered the trade and the close of the bell, then our top side is sitting at about 13%. So I did place these trades about 15 on either side. So 15% on the bottom side, 15% probability on the top side. That was fairly even, so that we just, again, make a very neutral trade on MON. Now, one thing I always like to point out, and you'll kind of see this throughout a lot of these earnings trades coming up, is that this market makers move up in the top, and hopefully you can see that. If you can't, the MMM, it's in yellow, it's on your Thinkorswim platform. This actually is showing that the expected move for earnings is around $3.50. So what I like to do is at least get $3.50 away from the market, and you'll notice that we're definitely about that direction, $3.50 away on the bottom side. On the top side, we're absolutely $3.50 away from MON. So I like to get outside of that kind of one standard deviation expected move on MON. So just keep that in mind. That's a good tool to use. Sometimes if you want to get more aggressive, you can come in closer. Sometimes if you want to be more conservative, you can go further out. But I like to be just outside that range. That still gives us enough credit to make this thing worthwhile. So when we look at the chart here of MON, hopefully it just loads up here for me, because it's not loading up here right now. And we'll just do one expiration. Bear with me here, see if this thing loads up. It's just acting very slow at the McDonald's. Okay, so it's not loading up right now, but that's okay. But you guys know what a strangle looks like. It's just a very wide strangle around those strike prices, 113 and 104. All right, so the other earnings trades that we made are in Yum and Costco. So I'm not going to go as in depth with these. I'll kind of glance over them because it's basically the same logic that we kind of walk through here with MON. We traded the weeklies in both, the October 2, which is the second weekly contracts for October. In Yum, we did the 75 call and the 66 put, took in a credit of about 57 cents. So again, we'll go here to the trade tab of Yum so you guys can see exactly where our position is. And you can see we did the frontmost contract here, these weeklies, which only have about 3 days, and did about the same probability on each end. So as it starts to load up here, you can see that we kind of pin this right around 15 on either end. Same thing here. Market definitely moved on Yum towards the end of the day. So our top side was a little bit lower and our bottom side was a little bit higher, but you can see that I'm doing the same thing kind of mechanically on both sides of the market. We did the 66 strike below and the 75 strike above, so that should encompass a pretty wide range for Yum. Yum doesn't tend to be a huge mover, but we don't want to be surprised by it, right? And again, the expected move after earnings is somewhere around $3.15. So we definitely want to be outside of that range. And I think we're pretty good. We're pretty comfortable. We're just outside of that range on either end, both on the put side and on the call side. So we're definitely outside of the one standard deviation move, meaning that, you know, probably about 70% of the time it should land inside this range, which is what we want. And that should give us a good drop in implied volatility. All right, and then the other earnings trade that we made was in Costco. So Costco, same thing. We traded the weeklies in Costco. I believe Costco actually announces tonight after the close. So sometime this evening, I believe they announced. We sold the 129 calls and the 121 puts. Took in a credit of about 56 cents on that Costco trade. Did this one a little bit light because the volume in Costco isn't that great. It's not as great as some of the other ones. So you just have to, you know, adjust that back just a little bit because the volume in Costco wasn't as great, and so we're just kind of waiting for some of the data to load up here. But again, you look at the chart here of Costco, and definitely a big stock. It's going to have, you know, a pretty decent move. Costco, not a huge mover also. It's had a huge run-up since the last earnings event, but you can see that around the time that it makes and announces earnings, it doesn't usually make too big of a move. A couple moves here or there, but going back historically, it's not a huge mover around earnings, and hopefully it doesn't become a big mover around earnings. Now with our strikes at 129 and 121, we've got a pretty wide range going here on Costco. So on the top side, we're at 129. On the bottom side, we're at 121. So this is our profit window. As long as it opens up inside that window, we should make some money just in about a day or so for the trade. Implied volatility, again, not that high in Costco. It's at the 50th percentile, but it'll definitely drop as we get through this earnings event. So we will see a drop from the 50 level, and that's what we're just trying to take advantage of. All right, so let's go back here, and now that this is loaded up, you can see that I'm very, very neutral on Costco as well, around the 15% probability level on either side with the 121s and the 129. So a little bit of movement towards the end of the day, but generally speaking, we're pretty conservative on this one. Hopefully we should get a nice little move down in implied volatility and a nice quick profit on Costco. All right, and then the last trade that we had today was just closing out of our IWM call spread. So we closed out the IWM 115, 117 call spread that we had, bought those back for a 23-cent debit. Really, this is nothing more than the fact of, being mechanical with what we're doing, still sticking to our rules. When these call spreads decay to about 50% of where it was before, we go ahead and close out these call spreads, and so bought this back for more than 50% of max potential gain. There's no point in holding this thing all the way through November just to see the market turn around for 23 cents. So at least at this point, we closed out of those. Go ahead and buy those back. Took in a nice $81 profit on that trade. And really, we're taking what the market gives us, right? We have positions on both sides of the market, and as the market goes down, we're going to take those positions off that are profitable, and when the market turns around, because it inevitably will, we're going to go ahead and take off the positions that we started to build over the last week or so that are bullish. So we have trades on both sides of the market, have to take advantage of what the market gives you. With IWM in particular, we did have working orders today to get into some put spreads in IWM, so kind of flip the script on this one. Since IV is still high, we made some money on the way down. Now we're going to try to start establishing a position below the market with IWM in hopes that at some point it is going to turn around and give us a nice opportunity to see some premium decay. So we did have some working orders, but just didn't fill at the prices that we want, at the strikes that we wanted. So again, it takes a little bit of time, and you got to be patient. Don't be kind of too rushing to get into the market. You got to be patient and wait for your price and wait for your strikes. And so we'll see if we can't get those orders filled again tomorrow. So as always, I hope you guys enjoy these videos. I know this one was definitely probably a little bit interesting because we're making these earnings trades. Obviously, we'll see how these earnings trades kind of fare out over the next day or so. And we'll obviously update you guys tomorrow morning. If we close out any of these, look for probably closing or rolling orders really, really quickly in the morning. So be alert for those. But until next time, please let me know if you have any comments or questions, and happy trading.